Market is always unpredictable and you have to be prepared about everything, every situation that occurs in the market. In the year 2020, during the first wave of coronavirus, the stock market saw a massive dip. And many investors were obviously not ready for such a dip. So it is important that you are prepared. So in this video, we will see some of the strategies that investors must apply if there is an event of stock market crash. Hello and welcome to IndianMoney.com. I am Juhi and today we will learn about how to prepare in the event of stock market dip or crash. There is no point worrying about stock market crash or stock market dip because at one point or the other it will occur and we know it. So it is better that we be prepared for such an event. So let us move on and learn about the first strategy, first point that we must keep in mind in the event of stock market crash, which is to resist the urge of panic sales. It's obvious that when the market dips, then we have a temptation of selling our equities and our stocks at a very depressing price. But if history has proven anything to us, it is that the best and the worst performing days often come during the same time. Most of the time what happens is that due to the fear you panic, and if you are amateur investor, then you tend to sell your equities and your stocks at a depressing price. Rather, keep your SIP continuing because a time will come when the market will recover and you will see that you will get a good return. If not better, at least a good return. So it's better to keep your SIP continuing rather than making a panic sale. The next strategy or the next preparation that an investor must keep during a stock market crash is to resist the urge of panic buy. Now, similar to panic sale, one must resist panic buy too. The most common approach over here is to buy some index funds and then invest it into some blue chip companies. But one area that most often the investors forget during these times is to remember what is the tolerance, what is your risk appetite, what is your risk tolerance, what is your risk appetite. If you know the interest, if you know what your risk tolerance is, then it's very obvious that you will be less panic stricken when the market tanks. The next strategy that one must keep in their mind is to keep your portfolio rebalanced. Rebalancing is an investing strategy which helps you to reduce your portfolio risk. And in most cases, it offers a better adjusted return to the investors. Now, this is done by buying or selling a portion of your portfolio in order to set the weight of each asset class into its original state. Now, this not only helps in preserving your investment style, but it also helps in managing the portfolio risk when the market is choppy. The next strategy on the list is tax harvesting. Now, tax harvesting is saving tax on capital loss by offsetting it against the capital gain. Now, these techniques help you in a great way by offloading any fund or security that is weaker on your portfolio and replace it with a higher growth of funds and securities. The next strategy that one must keep in their mind is to focus on your personal finance. Now, if you keep few things in your mind, it will help you to protect your personal finance. The first point that you must keep in point under this is that you have to create a cash flow statement. You have to maintain a cash flow statement. Through this cash statement, you can maintain a record of your money, what amount of money is going in, going out on a daily basis. Another point that you must keep in mind is to create an emergency fund. Now, you can face any type of financial crisis. So, in this time, in this period of crisis, it is very important that you have an emergency fund with you. In case you have not developed an emergency fund yet, it is important that you do so now. The last point is to manage your debt. When there is a crash in stock market, it is important that you do not take additional debt. If you do so, you will become economically unstable. So it is very important that you manage your debt during such times, during such crash in the stock market. Last but not the least, the strategy that you must keep in your mind when there is a stock market crash is to focus on long-term investments. It is very important for the long-term investors that they do not keep a close eye on the market. Rather, they sit calmly and they do not make any kind of panic buy or sale during any market crash. It is important that during this time you make sure that your portfolio is rebalanced and you also take advantage of tax law protecting, etc. You have to understand that this market is always very unstable, and so instead of panicking, you have to keep calm and let the market do its work. Now let us understand whatever we have learned in this video so far. In order to be prepared for any stock market dip or stock market crash, one has to make sure that they do not urge to make a panic buy or a panic sale. Also, keep your portfolio rebalanced. Apart from that, focus on your long-term investment, focus on your personal finance. And last but not the least, do take advantage of tax laws. That's all for today's video. Hope you understood how to be prepared if there is an event of stock market crash. If you want to learn more about stocks, then you can do that on our Financial Freedom app, where we have developed a stock market course for you, that too in 6 different languages. To download the app, click on the link given in the description box below. If you liked the video, hit the like button. If you're new to the channel, subscribe, and don't forget to press that bell icon so that you get notified of every video we post. For more informative videos on stocks, investments, farming and more, keep watching IndianMoney.com. This is me, Juhi Singh, signing off. Be wise, get rich.